Welcome to the deep dive. Today, we're going to be diving deep into FiscalNote Holdings, or Note as it's known on the stock market.
Oh yeah, FiscalNote.
You want to figure out if it's a good investment opportunity, and you've provided us with a ton of articles and reports to help us do just that.
Great.
So let's get started.
Okay.
First things first, what exactly as FiscalNote?
It's fascinating, really. Imagine a company using AI to track global policy changes,
Okay.
and then helping businesses and governments anticipate the risks and opportunities that come with those changes. That's FiscalNote in a nutshell.
Okay, that sounds pretty high level. Can you give me a more concrete example of what they actually do?
Sure. Let's say a new environmental regulation is being proposed in Europe.
Okay.
FiscalNote's AI would not only track that proposal, but also analyze its potential impact on, say, a car manufacturer with operations in Europe.
Got it.
They could then advise the manufacturer on how to adapt their business strategy, comply with the new regulation, and even potentially influence the policymaking process.
Wow, that's pretty powerful stuff. So they're not just selling data, they're selling insights and even action plans based on that data.
Precisely. And their client list reflects that value proposition. We're talking about over half of the Fortune 100 companies, along with government agencies, nonprofits, and even congressional offices.
Yeah.
They've got a pretty diverse range of clients who rely on their insights.
That's impressive. But how do they actually deliver these insights? What kind of products and services are we talking about?
Their flagship product is called FiscalNote. What makes it so powerful is that it uses AI to not only track and summarize massive amounts of policy information,
Okay.
but also to actually predict how those changes might impact a specific client. That's something that traditional research and analysis firms simply can't do at the same scale or speed.
So it's like having a personalized policy analyst powered by AI?
Exactly.
That's got to be a game changer for businesses and governments trying to navigate this increasingly complex regulatory world.
Absolutely. And they've got other tools for legislative tracking, bill tracking, advocacy, and even custom analysis. They've also partnered with Microsoft for a Bing plugin and with Google to integrate with Bard.
Oh, wow.
These partnerships speak volumes about their commitment to being at the forefront of AI technology.
Okay, I'm definitely starting to see why people are excited about this company.
Yeah.
But as you know, technology is only part of the equation. What about the people running the show? Who's steering the ship at FiscalNote?
That's where things get interesting. FiscalNote is going through a leadership transition right now.
Okay.
The co-founder, Tim Huang, who's been the driving force behind the company's vision, is stepping back from the CEO role to focus on strategy.
Interesting.
This move, of course, raises the question of whether the company can maintain its innovative edge without its founding visionary at the helm.
Yeah, that's a valid concern.
Yeah.
So who's taking over? Are they up to the task?
The new CEO is Josh Resnick, a seasoned executive with over 25 years of experience in leadership, law, and business. He's coming in with a strong track record of success and a focus on operational efficiency and profitability. This might be just what FiscalNote needs to move from a high-growth, high-burn company to a more sustainable and profitable business.
It sounds like they're trying to strike a balance between innovation and execution, which is never easy. But that leadership transition also makes me wonder about their financial health. They're a tech company, they're growing fast, they're investing in AI. Are they actually making money?
Well, that's where things get a bit more complicated. Their financial picture is a bit of a mixed bag.
Okay.
On the one hand, they're generating strong revenue growth, having exceeded adjusted EBITDA forecasts and hitting $3.4 million in the third quarter of 2024. They're even projecting to reach profitability by the end of the year based on adjusted EBITDA.
Okay, so the revenue is there, but what's adjusted EBITDA?
It stands for earnings before interest, taxes, depreciation, and amortization. And it's essentially a measure of a company's operating profitability. They're projecting a positive adjusted EBITDA, which means they expect their core operations to be generating a profit by the end of the year. However, this doesn't factor in things like interest payments on their debt. Speaking of debt, their debt-to-equity ratio is a bit of a red flag. It's currently at 1.83, which means they have significantly more debt than equity.
That does sound a bit risky. Are they doing anything to address that high debt level?
They are taking steps to improve their financial position. They've been divesting non-core parts of their business to streamline operations and pay down debt. They're also laser-focused on operational efficiency, which could help improve their margins and ultimately their bottom line. But it remains to be seen if these efforts will be enough to offset their high debt burden and achieve sustainable profitability.
All right, so we've got a company with a compelling vision, innovative products, a leadership team in transition, and a financial picture that's showing both promise and some areas of concern. This is already getting interesting.
Yeah.
But before we move on to the next chapter, let's take a quick break. We'll be right back to delve deeper into the world of FiscalNote.
Sounds good. Welcome back to the deep dive. Now let's shift gears and talk about market sentiment. What are the analysts saying about FiscalNote?
Well, from the reports you've provided, it seems like Wall Street is feeling pretty bullish on FiscalNote.
Oh, yeah.
The general consensus is a strong buy rating, with an average price target of $3.30. That's over 70% potential upside.
It's certainly a significant potential return, but as always, we need to be cautious about reading too much into analyst ratings. They're not always accurate predictors of future performance.
True, but it's still worth understanding why they're so optimistic. Is it just hype around AI, or is there something more substantial driving their positive outlook?
It's not just hype, though. The AI narrative certainly plays a role. Analysts are particularly intrigued by FiscalNote's recent regaining of compliance with the New York Stock Exchange listing standards. This comes after a period of volatility with their stock price. So regaining compliance is a positive sign for investors.
So they've weathered that storm and are back on solid ground. That's good news.
Yes, it suggests they're taking the necessary steps to address concerns and maintain investor confidence. And beyond that, analysts are excited about the potential for their AI-driven solutions in a world that's only getting more complex from a regulatory standpoint. As governments worldwide pass more laws and regulations, businesses need help navigating this increasingly intricate landscape. FiscalNote is well-positioned to capitalize on that growing need.
It's like they're offering a GPS for navigating the regulatory jungle. But who exactly are the people charting the course? We've talked about the leadership team, but what about the overall ownership structure of FiscalNote?
That's a great question. FiscalNote has a fairly diverse ownership structure. Institutional investors hold a relatively small percentage of shares, around 0.13%.
So if institutions aren't the dominant players, who holds the majority of the shares?
A significant chunk, roughly 36%, is held by company insiders. This includes the founders, executive, and employees. The remaining majority of the shares are distributed among public companies and individual investors.
It's interesting that insiders hold such a large stake. It suggests they have a strong belief in the company's long-term potential.
Exactly. It can be a positive signal when those closest to the company have significant skin in the game.
Okay, so we've looked at what FiscalNote does, their leadership financials, market sentiment, and ownership structure. But before we wrap up, we need to address the elephant in the room: risk. Every investment comes with risks. So what are some of the key risks associated with FiscalNote?
You're absolutely right. No investment is without risk, and FiscalNote is no exception. To understand the potential pitfalls, let's do a quick SWOT analysis, looking at strengths, weaknesses, opportunities, and threats. Ready?
Absolutely, hit me with it.
Starting with strengths, FiscalNote has a lot going for it. Their AI technology is truly cutting edge, and they have access to massive and unique data sets on global policies. They've also got that expert analysis layer we discussed earlier, which adds valuable context to the data. And let's not forget their client list, which is incredibly impressive and speaks volumes about the trust they've built.
Yeah, their client roster is definitely a testament to their value proposition. But you mentioned some concerns about profitability and debt earlier. Are those the main weaknesses we should be considering?
Yes, those are definitely key concerns. Their path to sustainable profitability remains somewhat uncertain. While they project becoming profitable on an adjusted EBITDA basis, it's essential to remember that this doesn't include all their expenses. Additionally, that high debt load could become a real burden if they hit any bumps in the road. Plus, their reliance on subscription revenue makes them vulnerable to economic downturns.
So if businesses start tightening their belts during a recession, FiscalNote could be one of the first expenses to get cut.
Precisely. Now let's shift to opportunities. The AI and regulatory landscape is evolving rapidly, which plays right into FiscalNote's strengths. They're at the forefront of a trend that's only going to get bigger.
So they're surfing a wave that's still building.
Exactly. They have the potential to expand into new markets and offer even more sophisticated solutions. For example, imagine them using their AI to help companies navigate global supply chain risks or anticipate changes in environmental regulations worldwide. The possibilities for growth are vast.
It sounds like they have a bright future ahead of them. But as with any high-growth company, there are also potential threats lurking on the horizon, right?
You're right. Competition in this space is fierce, and FiscalNote is up against established players like Bloomberg Government and Dun & Bradstreet, as well as a growing number of agile startups. They can't afford to become complacent.
So they need to stay ahead of the curve, both technologically and strategically. What else should we be wary of?
Well, the global economy is always a wild card. A significant economic downturn could put a damper on their growth plans. And there's always the risk of technological disruption. What if a new, even more sophisticated AI emerges that makes FiscalNote's technology look outdated? That's a risk inherent in any technology-driven business.
Okay, so we've covered a lot of ground here. We've looked at what FiscalNote does, who's leading the charge, their financial situation, market perception ownership, and even the potential risks and rewards. This has been a comprehensive deep dive.
It has been a thorough exploration, but remember, the most important part of this deep dive is what you take away from it. Do you see FiscalNote as a company worth investing in?
Well, based on everything we've discussed, it seems like FiscalNote is a company with massive potential operating in a dynamic and rapidly growing market. But they also face some significant challenges, particularly when it comes to profitability and debt. It's a classic case of high risk, high reward.
You hit the nail on the head. It's a company that could deliver outsized returns for investors willing to take on some risk. But it's crucial to weigh the potential rewards against the inherent risks carefully.
So there's no easy answer.
Yeah.
But we've certainly gathered a lot of information to help you make an informed decision. And speaking of informed decisions, I want to remind you that we have an exciting announcement. But first, I just wanted to say thanks for joining us on this deep dive. We'll be back next time with another fascinating exploration of a company, a trend, or an idea that's changing the world. Until then, stay curious, and don't forget to hit that subscribe button so you don't miss out on our future deep dives.
And for a deeper dive into other AI-driven companies, check out the Stock Analytics AI YouTube channel. They provide in-depth analysis and insights on companies shaping the future of technology. You can find the link in the show notes.
Great suggestion. And as always, a friendly reminder that we are not financial advisors and this is not investment advice. Always do your own research and consult with a qualified professional before making any financial decisions.
Absolutely. Investing involves risk, and it's crucial to understand those risks fully before jumping in.
Right, so no easy answer, but we've certainly gathered a lot of information to help you make an informed decision. And speaking of informed decisions, I want to remind you that we have an exciting announcement. But first, let's hear from our expert. What are your final thoughts on FiscalNote? Is it a buy or what?
Well, if I had a crystal ball that could predict the stock market, I wouldn't be here. I'd be on a yacht somewhere, sipping, something bubbly.
Okay, fair enough. But based on everything we've discussed today, what's your gut feeling?
It's a tough call, honestly. There's a lot to like about FiscalNote. They're tackling a real problem with a unique approach. They have a solid leadership team. Their AI technology is impressive, and their growth potential is huge. There's always a but, right? Their profitability is still uncertain, their debt is high, and they're in a very competitive and rapidly changing market.
So it's a bit of a gamble.
You could say that. FiscalNote is the kind of company that could make early investors very happy, but it's not for the risk-averse.
All right, so no definitive answer, but plenty to think about. I guess that's the nature of investing, right? Weighing potential rewards against the risks.
Exactly. And that's why it's so important to do your own research, really understand the company, the market, and your own risk tolerance before making any investment decisions.
Couldn't have said it better myself.
Yeah.
Well, there you have it, folks. Our deep dive into FiscalNote Holdings, Inc. Hopefully you've come away with a better understanding of this fascinating company and its potential impact on the world of AI-powered policy and global intelligence. Thanks for joining us on this deep dive. We'll be back next time with another fascinating exploration of a company, a trend, or an idea that's changing the world. Until then, stay curious, and don't forget to hit that subscribe button so you don't miss out on our future deep dives.